Hello and welcome to this brand new edition of All About Your Company. We're obviously on ET now. I'm Harsh Saita, and what you're seeing at the bottom of your screen is a brand new ticker. And on that ticker, you're seeing the P ratio of every stock. This is an industry first, viewers. So what you get is more detailed insights in the run-up to the budget, which is now less than a week away. And hopefully, so that P ratio, Axis Bank 15 times, Bajaj Finance at 31 times, is an industry first that you're seeing. That's the trailing 12 months price to earnings multiple that you're seeing. Now on to this edition of the show. We're going to be talking to Jindal Stainless today. And of course, let's first try and understand, as we always do, as to what I want to know about the company. The first piece is with regard to the product mix. What Jindal Stainless has done in Q3 is it has sold more of its lower value product, and despite that, the EBITDA per ton has gone up. That's what really stands out, and it's gone up by 1% QOQ despite a far higher composition of the Series 200, which is the lower margin sales which they have done. Now, therefore, what next with regard to EBITDA per ton? Because that's the absolute basis of valuation of a stainless steel maker, and this is the only stainless steel maker in the country. So that's the first piece I want to know. The second one, will product mix tilt back in favor of the Series 300? And if that were to happen again, viewers, that offers margin upside, because despite doing Series 200 higher sales, they've done better margins, and therefore this could well mean that the EBITDA per ton has still scope for upside. We'll try and understand whether the mix tilts back towards the Series 300 or not. The third piece is with regard to volume growth. They've guided, or the aspiration is that there will be double-digit volume growth. I'm trying to understand whether the underlying tailwind for the next 2-3 years looks positive with regard to where volume growth is concerned. It's likely that the management will not give us guidance on this, because they've said they will give fresh guidance only at the end of Q4, but we'll still try and get a sense as to how that's playing out. The fourth piece is with regard to exports. Now, CBAM, which is Carbon Border Adjustment Mechanism, is in play at the moment where Europe is concerned. There are certain tweaks and adjustments internally which Jindal Stainless needs to make. And if those were to come through, you could well see Europe kickstart again in terms of sales. And that could mean positive for margins, positive for volumes. We'll try and understand how quickly that can happen, because there's limited visibility on that for the moment. Also, what does the FTA between India and EU open up in terms of opportunity, and what could this mean for a Jindal Stainless in particular, even in terms of capex and volume growth? The last piece is with regard to debt outlook. They're doing capex in Jaipur, in Indonesia. They're also buying land in Maharashtra, which is expected to push out capex in FY28, which is the Maharashtra capex. Where does the debt look, or what is the debt profile going to look like through this capex cycle, is what I'd want to know. So all of these is what we'll try to cover. Now, first off, let's try and understand what the company does. It's obviously a stainless steel maker. It's the only stainless steel maker in the country. 3 MTPA, or the largest one rather, not the only one, but the largest one. 3 MTPA capacity is what it has. They're scaling upwards quite sharply. Founded in 1970, they have integrated operations. Of course, part of the Jindal Group itself. Now, how is stainless steel made, and how is it different from steel? Let's try and understand it from the basics. First, raw material is melted. It's steel scrap, iron, ferroalloys, all of those are melted. Thereafter, oxygen is blown for purification process to remove impurities. Thereafter, chromium nickel is added to determine rust resistance, because that's really the truest quality of stainless steel. And thereafter, you've got all of your products which are made. What are the products that are made? Thick sheets, which form a base for various products, including the likes of construction sites and buildings. You also have cold roll steel, which is thinner, more precise, for example, for cooking purposes. Cold roll steel is used for that. And then you have long products, rebars, bars, and the likes, which is again used for construction, but more for pillars and the like. What's really the unique blend of, or the uniqueness with regard to stainless steel the chromium that's added and the nickel, it reacts with air to form a protective layer. So nickel is added as a result, and therefore higher value products generally have a higher value composition of nickel in them. Lower value products like your the exhausts of your automobiles, they will have a lower blend of nickel. So that's really the key component, and that's also a raw material, mind you viewers, and therefore nickel prices moving up and down impacts the numbers of Jindal Stainless. Now let's talk about, you've got the products on your screen already. You've got all of those products that Jindal Stainless does. These are the sectors which it supplies to: infra, construction, auto. You also have industrial and consumer goods. Consumer goods, of course, evidently so, from ACs to your cooking utensils. All of them use stainless steel. Let's talk about geography. Currently, it largely caters to the domestic market, but has exports to over 50 countries, viewers, with a 9% revenue share in exports versus 91% in domestic. It does it even supplies the Vande Bharat with stainless steel for the purpose of the Vande Bharat coaches. So you've got an immense opportunity in terms of Jindal Stainless supplying domestically as well. Now let's talk about the metrics, and we'll start off with the incomes, with the P&L account. And in the P&L account, you'll see the top line hasn't really picked up in significant fashion. You've just seen a 6% revenue CAGR on the top line. On top of it, there's been pressure on the EBITDA. The EBITDA as well as profit after tax have actually been negative over the last 3 years. So you've been absolutely flat on a very high base of FY22. FY22 was a blockbuster year, viewers, where Jindal Stainless was concerned, and therefore the taper down was not as big a surprise, but we've not really recovered to those levels yet, both on EBITDA as well as profitability. So that 16% margin number in FY22 hasn't been breached. When you're looking at the margins, they've largely actually come off from that 16% to around 13.5% in the latest quarter. So not bad at all when 9-month FY26 is concerned. You've seen margins pick up from the lows of 10%. Now let's talk about the balance sheet and whether it's resilient enough. Mind you, it's a cyclical business, of course, as is all commodities. And what you're seeing, therefore, is a book value of around 17,000 crore in terms of the book value. The market cap is around nearly 65,000 crore. So this trades at around 4 times book. The borrowing number, as you can see, is just about 6,300 crore with plenty of capex. We spoke about it. Indonesia, Jaipur, and now Maharashtra will also come on stream with regard to where capex is concerned. So that's something to look out for. The other positive piece is that the debt number has actually gone down in Q3 FY26 versus Q2 as well. So what we've seen is that the debt number has actually come down by around 200 to 300 crore in Q3, which is another positive. And this is despite all the capex that's coming through. Now let's talk about the cash flow. And cash flow has been extremely strong. There's been no concern whatsoever. But when you're looking at the debt to equity, going back to the balance sheet, when you're looking at the debt to equity, it's not particularly concerning per se. So that's why we've given it a thumbs up, of course, where the balance sheet is concerned. That's the other piece I just wanted to kind of cover. Let's talk about the cash flow. And in terms of the cash flow conversion is extremely strong. So no concerns there. We've given that a thumbs up as well. You can see that on your screen. The EBITDA to cash flow conversion is 100% plus. Maybe some unwind of past years. Let's talk about return ratios. And, within that, you've seen extremely strong return ratios. Of course, FY22 was just a blockbuster year overall. But even outside of that, the return ratios have been very, very healthy, 16 to 22%. And the last 3 years as well, 18 to 22% is the kind of return ratio this one has clocked. Not bad at all. And therefore, a thumbs up there as well. Let's talk about shareholding. Promoter holding is quite strong. You're seeing 60 to 61% promoter holding in the company. You've got FIs participating well, DIIs too, and then you have the public holding around 10% odd. So very, very strong in terms of the shareholding pattern as well. That's a thumbs up. Let's talk about what the analysts are seeing. And again, within the analyst community, there is nearly a consensus buy call here. 12 buys, 3 holds, no sells. And there is an upside of around 13%. Now, that's not outstanding, but nonetheless, there's a 13% upside with 12 buy calls. Now, the interesting piece is this is valued on the basis of EV to EBITDA, which means that you add back debt and thereafter you use EBITDA for the purpose of your denominator. And what this has typically traded at, the 5-year range, as you can see, is around 7.5 to 12.5 times. The 5-year average is at around 10.1 times. It currently trades at 11 times 1 year forward. But if I were to roll that number, say, a year more, that will mean that you've got around 7,500 crore of EBITDA. So currently at 65,000 crore, this does around 6,500 crore of EBITDA 1 year forward. But the growth thereafter is expected to be extremely strong. That is FY28. And if that were to be taken as the base, you'll probably be looking at a 2-year forward EV to EBITDA of around 8.5 times, which looks at the lower end of the band. So that's what we'll try to kind of understand as to whether the 2-year pipeline is strong enough. Now, what we'll do is slip into a very short break. On the other side, we'll speak with the management of Jindal Stainless. Stay with us. Welcome back. Let's quickly give you a snapshot of what we've analyzed in terms of Jindal Stainless and what the numbers say with regard to the company and you know what to expect going forward. Let's bring on board Mr. Tarun Khulbe, who is the CEO at Jindal Stainless, to speak to us. Mr. Khulbe, great having you. Let me first start off by understanding how Q3 has been. It's been a very strong quarter for you, let me admit that. But talk to us, the Series 200 in terms of sales, the mix tilted, and despite that, your EBITDA per ton went up. Talk to us about the sustainability of this kind of a number. Is this a one-off, or can this sustainably still, persist at these levels in terms of EBITDA per ton, despite the Series 200 doing mix going up?
Okay, thank you, Harsh. So, as a company, what I can say that the good part with the Jindal Stainless is that as a company, we are quite an agile company. So when it comes to products within the series 200, 300, 400, different product segment, different market segments, we are quite nicely distributed business. And that is why, being agile, we keep on changing these ratios from time to time. Because if you look at even at the history, quarter to quarter, sometimes 200 increasing, sometimes 300 series increasing. This we have been doing, and we continuously do that depending upon the various situations, market demand, market requirements, and overall business scenario for the company. Now, so far as EBITDA per ton is concerned, you are absolutely right. We had, in the beginning of the financial year, we had given a EBITDA guidance. EBITDA rupees per ton guidance was 19,000 to 21,000 per ton. Now, of the quarter 3, we have delivered 21,000 around 400. If we look at the 9 months average, it is around 21,300. And we believe that quarter 4 and the whole year, when we close, we should be closing with the higher side of our EBITDA guidance. So that is whatever we have hit whatever we have delivered in the 9 months. We believe that around the same number, slightly better, but around the same number, we should be closing the year also.
Mr. Khulbe, what's driving that number higher? So obviously you've done very well for yourself. But what surprised you on the upside that the number is currently getting clocked at 21,000 plus and largely sustainable, would you reckon, even into FY27-28? Can you build on this number? I'm trying to get a sense of that.
Okay, so when we had given at the beginning of the year that our EBITDA guidance would be 19,000 to 21,000 per ton. So at that time also these questions had come because our Q4 of the previous financial year, we were at the lower number. But okay, at that time also we had given our plan, and which I can repeat also, that as a company, we are continuously focusing on the value-added products. Even the cold rolled, the cold rolled product share in our product mix, we are continuously increasing it. When we had taken over the Chromini in the last in the last financial year or FY25, at that time also we had said that going ahead, our focus would be on increasing our share into the value-added products. And this continuously we do. And if you look at it, that our HRAP to CRAP ratio, or even if I tell you our cold roll products share in our of our total sales, a couple of years before it was less than 50%, and now in Q3 we have already hit 55%. And with the other with the other value-added products focus, I believe that because of these steps, we are able to deliver whatever we have been committing or whatever the guidance we have been providing.
Yeah, okay, so that gives us a very good flavor. But Europe has been a drag for you. Exports have been a drag for you. Let me broaden that conversation. And Europe in particular, because of CBAM, you have some headwinds in the US because of tariffs. Talk to us about if only Europe were to unwind. And talk to us about the timing of that unwind as well. If CBAM, for example, you're able to justify that you're within the parameters where Europe is concerned and sales were to pick up, what is the positive impact of that only on margins, in your opinion, or on the EBITDA per ton number? What is the likely positive impact of that and the timing of that?
Okay. So, Harsh, let me say this, that as a company, the good thing is that we are an Indian company, we are in India, and I must say that as a market, our domestic market is doing fairly well. It is continuously growing on an average of 7 to 9%. And we are quite focused on it, and definitely that is helping us. The growth of domestic market is helping us to grow as well. Now, yes, we have been doing export also, and our major markets in exports has been USA and Europe. Of late, USA was also a bit, I'll say a bit of instability was there in the customer's mind because of the continuous changes in the policy over there. So far as Europe is concerned, you're right, the CBAM is something in Q4, which was again a lot of uncertainty or unclarity was there. CBAM got into the definitive phase from 1st of January. But still, only at the end of the December, the European Union finally came out with the threshold limits and the calculation methodology from the tax point of view. But still, what they have not come out is with the verification process and the verifier that who will be doing this. Now, as a company, we have been taking many steps to be ready or to prepare, because we have also 3 years before we had declared that as a company we had set our targets of being carbon neutral by 2050 and to reduce our carbon footprint by 50% by 2035, which we are on the course. Now, we believe that once this verification process and verifier part is done, and then the real picture will emerge, because European Union still, they have even changed their stances in the recent past also couple of times, and we want to be very clear about it. But yes, once the clarity comes and we see the thing, then we believe that definitely we'll be again able to increase our share into the European market. But as I said, that still it is not that we are so much so dependent upon it. As a company, we are continuously giving our whatever the volume increase margins. For this FY26, we had given 9 to 10%. We are on course to that. Despite whatever is happening in the global market, we are delivering to whatever the guidance we had provided.
Yes, Mr. Khulbe, I have to give you that credit. But But we've got flashes on the bottom of the screen. Proposed zero tariff on iron and steel products. Mr. Khulbe, this is from the India-EU FTA, which is coming out. This could be big for you as well. And I'm not talking maybe a year while this CBAM issue is still getting resolved. Beyond that, this is a huge positive. And how big of a positive is it for you? Talk to us about that.
So, Harsh, actually, I will have to study exactly because you are just flashing the news, and we will have to study that what exactly this FTA is bringing out, because we have to be very clear about how does it impact whatever the ADD they have put or CVD they have put on the country, whatever the CBAM implication. Once we understand, but yes, any such condition which directly or even indirectly helps, even if the component manufacturers and all, if they get through FTA some relief, that means some more consumption within the country. I think that will be a positive for the company. But as I said, that before making or before giving any reaction to it, I would like to, or we would like to study it thoroughly about the FTA. And then I think maybe in the next call, we'll be in a better position to give you the exact impact of it.
Okay, Mr. Khulbe, thank you so much for joining us. This gives us a great perspective on where demand is headed. EBITDA per ton also surprising on the upside, so there's a positive bias to that as well. Mind you, viewers, double-digit volume growth and maybe EBITDA per ton going up from the 21,000 to 23,000 could well mean that by FY28 you'll likely see a 20% EBITDA increase for a Jindal Stainless, and there is scope for that where volumes is concerned. But India-EU FTA, that's the big news breaking at the bottom of the screen. Let's go across to Ashesha. She's here with a roundup on all that is happening. Ashesha.